Hello guys, this is a pre-market analysis of 22nd of June. So again, US-Iran discussion is coming into the picture, and that's what again going to decide the market direction. There are other things also, like FIIs bought for almost 5,000 crore last day, which I haven't seen for the last almost 2-3 years. So let's discuss what is this present situation. In fact, Israel have attacked Lebanon, and Iran after that have stated that the Strait of Hormuz would remain closed until the Lebanon ceasefire is properly enforced. So Lebanon is also coming under ceasefire, and that's also part of the peace agreement. So that's why Iran have made it very clear that unless this is also enforced, there is no such opening of Strait of Hormuz. And Trump again threatened. Trump asked Iran to stop proxies in Lebanon to create issues. So their argument is that in Lebanon, the issues is actually created by the proxies, and it is proxy war which is going on rather than the direct. Even this Hezbollah and other organizations, these are proxies of Iran. So that's what Trump's claim, and also want Iran again with a stronger action. And this US-Iran meeting is going on. Negotiators from both the countries have met, and US President J.D. Vance have made a statement that two objectives has been achieved, that is reopening of Strait of Hormuz and ending Iran's nuclear weapon program completely. And you see oil price yesterday, or even now also, if you look at it, it's around 78 per barrel, which is WTI, and Brent is around 81 per barrel. So slightly oil price have increased, maybe because of that tension which is going on. 1% increase in both I can see, but still I don't think this is going to be a major problem. And GIFT Nifty is also not indicating big problem. GIFT Nifty as of now indicating a 50 to 80 point gap up opening. So we're going to get a gap up anyway. Now again, if you look at the data from Strait of Hormuz in the last check, the satellite images through that you'll be checking, right? So 33 ships have passed, which is around 55% of normal traffic, and the recent one, it is showing around 55 ships has been passed through the Strait of Hormuz in the last 24 hours, which is, if you see, the daily average is around 60 ships. So 55 means it's almost 90, more than 90%. So shipping activity, it's like as of now, it's almost normalized. So that energy threat is not there, energy security issues no more there with respect to Strait of Hormuz. Now, global market cues, if you look at US markets, Friday was a holiday, so US markets have closed. And US futures, if you see, all major indices are trading approximately 0.3 to 0.5 negative. So that's a small negative for the global sentiment. So if you see crude price slightly increasing, US futures are trading slightly negative, but GIFT Nifty as of now indicating a small gap up. So there are some negative sentiments in terms of US market, US futures, and the oil prices. GIFT Nifty, as I told you, which is around 24,150, 140 level. If you equate that, it's around 50 to 80 point gap up opening. Now, the most important positive for us is last day, FIIs bought for 4,850 crore. We have seen a couple of other instances also before in this month that FII is buying, but that is 200 and 100 crore like that. But this is massive. We have seen only this in selling figures, but FIIs, are they coming back? We don't know. So let's see, because it's a big buying activity from FII side for quite long time. But DIIs turned out to be net sellers. I think there may be some mutual agreement between them that I'm going to buy today, you're going to sell today, right? So open interest also, if you see, 18% call open interest have added, and 2% put open interest unwound. Those call writers might have unwounded the position. So see, that's the prop traders that they have reduced their writing position, the sold put position. And PCR, if you see, that fell from 1.12, which was very good bullish last day, to 0.93, which is slightly bearish. So if I look at put call ratio, it's slightly giving a bearish indication based on the last day market, because last day was negative. But things might change today, right? That we need to discuss, we need to see depending upon how market is opening. Now, weekly expiry impact, if you need to discuss, 104% new call open interest is added. 61.5% put open interest is added. This is with respect to Sensex. So more call, which is almost double. So if you remember, the PCR for Sensex was very positive last day, right during expiry. I told you, even at 1.42 on Wednesday, 1.35 on Thursday, which was on expiry day. but that have fallen to 0.82. So that was so bullish. Now it looks slightly more bearish. But remember again, this is last day's observation, depending upon the last day move, the way market have fallen and this negativity was coming, put open interest is coming down actually, right? And the call open interest is added. Also, 24,200 is acting as a major resistance, and 24,500 is definitely going to be a stronger resistance. So these levels are very strong. Apart from that, Reuters, Reliance is going to file, its IPO. So IPO size is around 3.8 billion. So that's going to be the big thing that we are going to see in the upcoming days. And the valuation is around 131 billion. And the public issue size is approximately 2.9%. So ownership structure, if I need to discuss, Reliance owns 66.7% of Geo platforms, and the estimated value of Reliance stake will be around 87 billion. So Geo valuation, is actually compared to the expectation. In fact, this valuation is actually low. So the important factors for today, this oil price is slightly higher. Even if it is 1%, it is actually negative. But if you consider from where it is coming and where it is now, that is actually positive. At one point when the war was at its peak, we have seen 125 also. But now we are seeing 81, where 1%, it's like our market also sometimes move 1% up, 1% down. That's not a significant impact. Unless you see now a 3 to 4% change in oil price, you don't want to worry, right? 1%, that's very, very much okay. But still, 1% oil price is higher than the last day. US futures are trading negative. That's another, negative for the market. Gift Nifty is indicating a gap up as of now, which is positive despite all this negativity. As of now, Gift Nifty is trading 24,150, which is positive. And open interest data also, whether it is NSE or BSE, the put call ratio have reduced, and that's again showing some kind of bearishness. So negatives are oil price, US futures, and open interest data, the PCR ratio. But these are not big deal. As of now, Gift Nifty is indicating positive. And Strait of Hormuz activity is normal despite all these threats and arguments. 90% of the shipping activity before war is actually happening, which is very good sign. And positive reaction can be there because of this Geo IPO also. The markets can be very good positive in the upcoming days. And also, but there can be like people can withdraw and invest in IPO. That possibility is also there, but not much. And US-Iran negotiation is continuing. That is also positive. So keep watch on the important levels. See, immediate support is at 23,950, 900 level for Nifty, and 800, right? And support, 900 to 800 level, considering market is going to open above 24,000 because of the small gap up that you are getting. Resistance 24,200 and then 24,500. So the immediate level is 24,200. That last day they have touched, right, on Sensex expiry. They have touched almost 24,200. Previous day it was expected to go to 24,200 after getting that gap up and further up move, but it couldn't move. You got a sell off also, but Sensex expiry day towards the end you got a move, and market touched at that level, and then it came down on Friday. So let's see today. Definitely 24,200 is going to be a major resistance, and if that is closed, 24,500, only FII buying can take to that level at this moment. There is nothing else. So let's see the market, and then you will have to decide according to what the market is doing, according to the important levels you should be trading, rather than anticipating a breakout or anticipating a move to 24. There is no need to consider that it will move to 24. I cannot say it can move to either. It will be moving to 24,200, or it will be. So it is better to sell options between the range of 23,800 and 200. I start today. I don't have any direction, so I start as a straddle. As the market moves 100 point up, I'll sell a call. As the market comes down to 100 point down, I sell further put. So when starting as a straddle, it is 1:1 ratio. Moving 100 point, it becomes 2:1 ratio. If you get a breakout, again I'll convert that also into straddle. So again 1:1 ratio. So I keep managing like that. So that's the best scenario when you don't have direction. And when you know that this is what going to happen, if it is sell on rise, then when you get that sharp up move and when you find that resistance level, you can buy put options. Or when I know there can be a recovery, I can buy call options. But be very careful and accordingly plan your trade and execute the trade. And if you would like to learn this in the live market, we have the live market trading community where we trade live and we teach during the live market. So you can get in touch with us. I see you there.